All right, today we're going to talk about something really interesting happening in Japan's construction industry. It's a total paradox. On the surface, things have literally never been better. But if you look just a little bit deeper, there's a huge potential crisis just waiting to happen. So here's the puzzle we're trying to solve. On one hand, you have record high wages and construction sites that are absolutely buzzing with activity. On the other hand, there's this shocking, almost cliff-like drop in new orders for future projects. So how on earth can an industry be booming and facing a potential collapse at the exact same time? To get our heads around this, we gotta look at both sides of the coin, starting with all the good news. So first, let's dive into the boom. Because, to really get why this is such a paradox, you have to understand just how good things are for Japanese construction workers right this very moment. Just look at this number, 600,505 yen. That was the average monthly salary for a construction worker recently. That's an all-time record high. And it's a jump of over 10% from just a year ago. So what's really pushing that incredible growth? Well, when you break it down, it tells a really fascinating story. See, this huge jump in wages isn't really coming from base salaries. Those only went up a pretty modest 1.5%. The real drivers here are massive summer bonuses and a big surge in overtime pay. It's a super clear sign that these companies are swimming in cash from a backlog of projects, and they're passing those profits right along to their workers. And to put that 600,000 yen number into perspective, it doesn't just break records for the construction industry, it completely towers over the average for all industries, which is sitting at around 420,000 yen. Right now, Japan's construction sector is, it's just playing in a totally different league. And this whole boom is being fueled by a mountain of actual, tangible work. We're talking about the total value of completed projects climbing to nearly 4.7 trillion yen. A huge part of that is thanks to a massive 18% surge in private civil engineering projects, and all those high wages we just talked about, they're actually working. The industry has managed to attract more workers, now totaling almost 2.6 million people, just to handle all this intense demand. So the present looks amazing, right? But here's the catch. All of this activity, the high wages, the new workers, it's all based on a backlog of projects from the past. When we start looking at the pipeline for future work, a much more worrying picture starts to emerge. And this is the real heart of the problem. While today's construction sites are humming along, the pipeline for what's coming next is starting to run dry. The new projects that should be getting started in the next year, they just aren't there. This is the number that has absolutely everyone worried. In a single month, the value of new construction orders plunged by 30% compared to last year. Now, after a long period of growth, a drop that sharp and that sudden is a massive red flag. And this isn't just happening in one area, it's widespread. The public sector saw a pretty big drop, sure, but the real damage came from the private sector. It fell by a whopping 32%. And that was the very engine that had been driving this whole boom. One analyst summed it up perfectly. The wave of large-scale capital investment has run its course. See, a huge chunk of the recent boom came from massive investments in things like new semiconductor plants. But now, that wave is over, and there's nothing of a similar size on the horizon to take its place. And if you look closer at the manufacturing sector, the figures are just staggering. Orders from electrical machinery, the sector that includes those huge semiconductor plants, have completely collapsed by nearly 70%. The chemical industry is down 42%. All in all, new orders from the entire manufacturing sector, a key pillar of demand, have cratered by 38%. But what's maybe even more concerning is that this weakness is spreading. It's not just about factories anymore. Orders from non-manufacturing sectors are also down significantly. This suggests that demand for new offices, for shopping centers, for logistics facilities, it's all starting to cool off. Maybe because people are worried about higher interest rates and rising material costs. So what you have is this incredible present colliding head-on with a pretty frightening future. And this brings the entire industry to a really critical crossroads. This right here is the core dilemma. On one side, the industry is in what you'd call a virtuous cycle. Busy sites lead to strong profits, which fund higher wages and attract more workers. It's great. But on the other side, a new, much more worrying cycle is starting to emerge. That sharp drop in new orders points to a future with less work, which is, of course, gonna squeeze profits. So the big takeaway for these companies is that they absolutely cannot afford to get complacent. The advice is pretty clear. They need to use the profits from today's boom to get ready for tomorrow's reality. That means investing in technology, in digitalization to get more efficient, and it means looking for new types of business so they're not so dependent on a single shrinking market. And all of this leaves us with the final, critical question. Is this just a temporary blip, a correction after a year of incredible, maybe unsustainable growth? Or is this the first sign of a deep, sustained downturn for one of Japan's most important industries? Honestly, nobody knows the answer yet, which is why the data we see over the next few months is going to be so important to watch.